loan to Uganda Clays Limited was granted on 29th December 2010. It was unsecured and was repayable within 96 months in equal monthly installments commencing after a grace period of 2 years, effective 27th December. Now, the question I have, actually, page 54 and page 75. The fund disbursed a loan worth 20 billion to Uganda Clays at 15%. Up to date, no amount has ever been recovered, unless you tell us otherwise. First of all, during this period, when you gave Uganda Clays this loan, it was making losses. I've looked at its financial statements, 2010, 29. It was making losses. Now, can you provide reasons to why you have never recovered this money? Now, to the former MD, Mr. Byarugaba, this may be a conflict of interest depending on how you respond. You are the same chairman audit committee of Uganda Clays, and you are appointed on 29th October 2010. This is the same year the unsecured loan was given to Uganda Clays. It has also come to our attention that this loan has been written off. Now you are writing off money that belongs to the SAVE. It's not money from the consolidated fund. So can you explain to us, maybe the board did it, you give us a resolution of the board and we take it from there. How? Because it is here in the Auditor General's reports, management reports. These ones never surface. I don't know why. Page 54 and page 75. So kindly explain to us.
Uganda Clays is a sad and an unsad story. Let me start off with the sad. The company borrowed money in order to expand. Their product was required in the market, and they felt that they needed to expand their production. So at the time, management of Uganda Clays sought to set up a new factory in Mbale. Good idea, but badly executed. So the money they borrowed from us was not sufficient to put the factory that they had wanted to set up in the right place. In fact, the products that were coming out of the factory after it was commissioned couldn't sell. The losses were quite high. So that's the reason why the company failed to repay the loan. As is prudent, if you have a non-performing loan, as that was, the fund was under obligation to provide for it and to take reasonable steps to try and recover it. However, as you correctly observed, the company were making losses and therefore were not in a position to pay. So let's fast forward, I think 2 years or 3 years ago, having seen that this company, which we have quite a big share of, was really going down and our money was never perhaps going to be recovered, we literally took over the management and seconded our staff, I think 2 or 3 staff, into the company. We provided them with ways and means of trying to improve the company. And as I speak today, the company has turned around. The company has become profitable, and the company has reinstituted the loan on its books, and the company now is in a position to begin paying the loan. Of course, they would have to pay it at an interest rate which has been agreed, and the fund members assurance to them that their money will be recovered. But as I said, this is a sad story because of the decision that were made by management of the company at the time. But it's also a good story because I believe that the reason why the company has turned around is largely because of the effort of NSSF as a shareholder, putting in the right expertise and the right board to be able to do so, including me being on that board.
Chair, can I seek some clarification? I was not in for this question. I'm a bit perturbed. Does the savers fund and the commercial bank operate the same? This is a loan, not an investment. You mean the fund has reached a level of now behaving like Standard Chartered and any other commercial bank?
That's a very good question because, in fact, you will notice that the law of UBRA, when it came in place in 2011, asked pension funds not to lend. So that activity was stopped in 2011. As the chairman said, this loan was disbursed in 2010.
Now, just before you come in, my understanding is NSSF is profit motivated, not a bailout. Now, Mr. Byarugaba, you were appointed on the audit committee of Uganda Clays on 29th October 2010. Is this true?
It's not true because I wasn't even, I just been appointed to the NSSF. So I'm not too sure that appointment, actually I don't know, I can't remember. But I know that I was appointed on the board of Uganda Clays, largely to help us manage the company on their board because of the fact that A, we were a large shareholder, I think we own about 32%, and secondly because we had lent.
Mr. Byarugaba, you were appointed on the, you go and check, but we have the appointment letters. You are no. So there's no way you can say I was appointed to supervise, yet your appointment at Uganda Clays was before they even got the loan from NSSF.
Actually, my recollection is that the loan was made before I even joined the fund. It's only that we disbursed after I had joined the fund. The approval by the board of NSSF happened before my time.
Okay, point us the right direction. Who here approved the loan? We want the person who approved. Risk. Can we have risk? Kindly get the microphone.
Chair, as you call risk, the question is approved.